Continue this conversation about Twitter. RBC Capital Markets lead tech analyst Mark Mahaney is joining us right now. Mark, is this the first quarter that they're doing this monetizable daily active users and no longer talking about just active users? Is that right?
Yeah, they introduced this concept a few quarters ago. It's not the first quarter, but they have switched the. We're starting to talk about DAUs, daily average users, rather than monthly average users. It's fine.
It's fine? What does that mean, it's fine? You don't seem that excited.
No, and when companies disclose less, it's not a good thing. But the metric that they disclosed is showing decent growth. And by the way, those net ads were better than expected, as Julia pointed out.
Right.
You want to see that, especially in the most mature market, the U.S. The fact that they can add 1 million each quarter, that's a good thing in what is perceived to be the most mature market. So these results are better than expected. This company normally prints upside to its guidance. They did it again this quarter. Seems like things are well intact at Twitter.
Okay, so the stock's now trading close to $40, $39.62. When you go back and redo your models today based on these new numbers, I don't know if your models are going to change. What do you think the stock is actually worth?
We have a hold rating on the stock. We think fair value is roughly in this ballpark. It's not a clear buy for us. Now, I think the story has fundamentally gotten better over the last 2 years. There's been a lot of management improvements, a lot of product improvements. One of the most interesting things, I think, by the way, that they're doing on the product side is making it easier for you to follow topics, not just individuals. So if you want to follow the Golden State Warriors, you can do that and capture all of the good bloggers, tweeters that hit that topic rather than try to find those. Like, there's some nice key improvements that they're rolling out that I think will make the site more intuitive for more people. That's a good thing for Twitter. But right now, there's tough comps. I think we're going to see a little bit of margin pressure because of all these investments in trust and security, just like Facebook had to do. So we're going to hold off on the stock, for now. But we want to see this momentum.
But you think there's more investment to be made than even Facebook had to make in the past couple of quarters?
Not that bad, not as big as Facebook has had to make, but I think they're going to have to spend a little bit more. They want to make absolutely sure that when these elections come around next year in the U.S. market, that there's no tampering, no influence, and Twitter is obviously an extremely important platform. Right. Going into next year, Twitter actually should be pretty interesting as a stock, not this year.
Hey, Julia?
Andrew, I think it's interesting. The company has posted its shareholder letter, and the priorities in this letter are two things. One is the progress they've made on health, which you've been talking about an 18% drop in reports of spam or suspicious behavior. They also showed that growth, the daily active user growth, accelerate to 14%. Now, we haven't seen 14% growth since Q3 of 2017. So I guess my question to you, Mark, is whether you think that fixing the platform and cleaning up the platform from that bad behavior on the platform is going to mean that this has a bigger potential audience than people had thought. And the question is sort of how big do you think Twitter can be? Did this quarter show that the market for this product is much broader than we may have thought a year ago?
That's, Julia, you're asking the right question. And the data point you just laid out, that 14% growth in DAUs, that trumps everything else. With all the puns intended. That's the single most important thing. If this company can show that accelerating DAU growth, everything else should follow. And it comes down to how well they can improve the product, including this making the site safer for people. I think there were just a lot of people who went onto the site and were turned off by the experience they've had in the past. I think the company's done a pretty admirable job of kind of ring fencing a lot of that kind of harmful activity on the site. If they can continue to do that, the base should expand. This is not going to be as big as Facebook. It's not going to be as big as Snap. But it can be bigger than it is today, and that's good enough for the stock.
Well, that was my question for you, Mark, which is, in an environment where Facebook is going to be at least facing the cloud of Washington, D.C., where's Twitter land, where's Snap, and if you could own either or all three, in what priority order would you put them?
Facebook first, Snap second, and Twitter third.
Really?
Yeah, I mean, look, you look at Facebook, you can buy this thing at 20 times earnings. So valuation is very easy. You don't need to spend a lot of time thinking about it. It's also got 20 to 30% earnings growth. So you're actually buying it at a discount to its growth rate. And the number of option plays you get out of Facebook with this things like WhatsApp in international markets, potentially Libra in the next couple of years, the ability to bring in commerce onto the platform. There's just a lot of option value.
You're discounting Washington completely, it sounds like. on Facebook.
I hate. Don't quote me as saying that, but yeah, I think. Well, look what's happened with Google's fundamentals over the last 3 years, despite all of the glare of regulation. Look, these are increased. These are really just taxes that companies like Google and Facebook increasingly and Amazon are going to have to face. But Google's results show that they can power through regulatory taxes. My guess is that Facebook's going to be able to do that as well. The fundamental value proposition of a Facebook to advertisers and consumers is overwhelming. It overwhelms regulatory pressures.
Okay, Mark, we are going to quote you on that. Washington, this is just taxes that they have to power through.
But Mark, I have to ask you about this. Mark, just want to ask you about the guidance also, though. Do you think the guidance is impacted by those regulatory issues and that concern? And what should we think about the guidance? I mean, we've been talking about the user growth, but how does everything happening in Washington play into what's coming in the third quarter?
Well, I want to see what happens. The one thing we haven't had a chance to go through yet are the margins and the margin outlook. Look, I look at these revenue results as kind of right down the middle of the fairway for Twitter. It's pretty consistent. That's a good thing. This company is starting to really generate a track record of consistency. Investors like that. Whether they're going to have to materially increase infrastructure investments around trust and platform security, that's the question mark for me and for some investors. So I don't know the answer to that question yet. That's going to be probably the single biggest new piece of news we're going to try to get out of the earnings call.